I recently made a video about Harry Dent, an American writer and macro strategist who is predicting an upcoming crash in asset prices pretty much across the board. Among these predictions, he is predicting that gold will fall along with stocks, bonds, real estate, and pretty much all other assets during the upcoming crash he is forecasting. So today I'll look into the tough to answer question of how gold performs during a deflationary bust, so stay tuned. Hi everybody, welcome back to The Contrarian. My name's Logan. I really like to talk about overall success in investing as well as going against crowd thinking mentality. So if you like these kinds of topics, just consider subscribing. I also want to make this clear that none of this is financial advice, so don't take any of this as financial advice. So to begin with, it's important to understand both sides of the argument as to whether gold is a safe haven or not during a deflationary market environment. To start out, let's look at the pro-gold side, which claims that yes, gold is a safe haven during a deflationary bust, and does not go down in value in relation to fiat currencies. Among the people most associated with this side would be other strategists and authors like Jim Rickards, Robert Kiyosaki, and most notably Peter Schiff. The pro-gold argument generally goes along these following lines. Ever since all fiat currencies, so literally all existing central bank currencies produced right now, ever since the US dollar exited the gold standard in 1971, central banks have had unlimited power to create money out of thin air. Now, this has led to some very convenient things in that governments and central banks have not needed to keep a balanced budget of taxation in order to pay off the balance sheet. Instead, it has simply been able to accumulate as debt. But there is no such thing as a free lunch, as I'm sure you are all aware of, and this is coming back to bite us. This has led to a huge discrepancy between the amount of dollars in existence and the amount of gold in existence. As is obvious, gold is naturally limited with intrinsic value. Sure, it can be mined, but the rate at which it can be mined is nowhere near the rate at which central banks have been printing money. Therefore, in an unwinding of global trust in the dollar and other fiat currencies, and people seeking true safe havens, gold will see a massive inflow of capital, and therefore will dramatically increase in price as fiat currencies, stocks, real estate, and basically all other assets fall in price. This is generally the lines that the pro-gold argument goes. It makes sense from a position of monetary policy, but is this how it would really play out? This is the real question. Now let's look at the side that claims that gold will also fall during a deflationary bust along with other assets. The people on this side are fewer, though they are still there. Most notably are people such as Harry Dent, who I just mentioned, and David Hunter. And Harry Dent definitely has the most bearish prediction of gold falling roughly 50% from where it is now, he's saying that it could fall as much as 50%. The argument here goes that in such a detrimental crash as what would need to happen for deflation, people would be selling gold as well as they needed fiat currencies to pay off debt, liquidate trading positions, and get into more financially secure position to prepare for the worst. Also, they look at past periods where deflation occurred, and in basically all of them, gold did go down for a short period of time along with assets. Such as the 2008 financial crisis, gold went down along with the stock market. It was for only a brief period of time, and this is all with the exception of the Great Depression. But during the Great Depression, gold was fixed in price. It could not move in price, so this is not a reliable source of data for either argument. Now let's go into this in a little more detail. In a recent survey done last year, 2019, it was found that 12% of the US population owned some amount of gold bullion, and roughly 14% owned silver, while 55% of Americans own stocks. So stocks are much more common for investors to own. So off the top, this doesn't seem to be as big of a liability as the stock market. After all, if only 12% of the population owns gold, this seems to have much less potential to become a bubble like what the stock market is susceptible to. And usually the people who own gold really have, solid reasons for buying it and really tend to, want to be in it for the long term. So frankly, I'm not quite sure which side will be proven correct and it's definitely possible that there's something in the middle that ends up happening. But I'll just give you something to think about now. Up until roughly a year ago, I would have tended to side with the pro-gold argument, claiming that gold would be a safe haven, but recently it's been more uncertain for me. I say this because of all the news and hype that gold, and especially silver, is getting right now, and all the short-term traders who are getting into precious metals. As I've said before, short-term traders are not the kind of people who are generally financially stable, or people who would hold through a downturn. They would sell when they thought the bubble had reached the top, and when they needed extra liquidity. So we can see this in the last month, through September, as the stock market has corrected from its all-time highs, and gold and silver has as well. It's not a large correction, only around 10-15%, but it's still there. Gold and precious metals have pretty much correlated with stocks up until this point. So I guess I see correct claims in both of these groups. Gold will not likely suffer as much as stocks and other bubble-like equity markets, but it still has been affected by traders and speculators getting into the market. So it could be correct a little during a deflationary bust. Maybe half of what other market assets would. So David Hunter's claim seems the most reasonable to me. It seems that he is taking these factors into account. He's predicting that gold could fall from, wherever it ends up at its high, whether it's 2,300, 2,500 is what he's forecasting. But he's forecasting that it could fall from there to 1,800 or so not a huge drop. So to me, this seems like the most reasonable forecast. It's also important to point out that both Harry Dent and David Hunter are long-term extremely bullish on gold and precious metals as well. So this is only a short-term kind of scenario they're talking about, but nevertheless, it would be nice to get in at the lowest price possible rather than going through a short downturn in gold. But anyway, let me know what you guys think about how gold would perform during a deflationary bust. Would it be a safe haven? Would it completely go down as well as equities? Would it be kind of a combination of the two? Anyway, let me know what you guys think, and I hope to see you again.